my 93-year-old, soon to be 94-year-old father uses to generate 15 to 20,000 a month as a hobby, and he's been doing that consistently for over 13 years. So it's a simple strategy that a lot of people use. Sadly, most people don't know about it.
My name is Mike Mauceli, and this is the Energy Show with REI Energy, where we're energizing your investments and maximizing your tax deductions. Today, we're going to be talking about oil and gas investing, and you're going to discover how oil and gas has richly rewarded investors and overcome all of Joe Biden's obstacles. My guest today is John MacGregor. John is an author, speaker, and financial educator. Great to have you on the show today, John.
Always great to be here, Mike. Thank you so much for the invitation. Appreciate it.
For our listeners out there, John is an author, a speaker, and financial educator, and he's got a great book called The Top 10 Reasons the Rich Go Broke. And I wanted to hear a couple of stories about that today. And also just relay that John and I were invited by Robert Kiyosaki to speak at ASU on financial education. So he's a good friend as well. And but first, I kind of wanted to start out, John, and talk a little bit about, how do you generate cash flow for investors?
Oh, yeah. Thanks for asking, Mike. I think that's a good way to start off. I've adopted a strategy many years ago using stocks and options. It's a simple and very effective and proven strategy. I did not invent. I just codified it into a step-by-step system that really anyone can learn. And simply, I show people how to pick winning stocks, highly probable stocks. And then we use options, a very simple option strategy to use those stocks that you bought to generate consistent income over time. It's the exact same strategy my 93-year-old, soon to be 94-year-old father uses to generate 15 to 20,000 a month as a hobby, and he's been doing that consistently for over 13 years. So it's a simple strategy that a lot of people use. Sadly, most people don't know about it. It's just using, again, stocks and options to generate consistent income on every single trade. So that's what I do. Yeah.
That's fantastic.
Yeah.
And I know that's a real need today, especially where the economy is, right? To have,
100%. I mean,
passive income.
I think the reason my program has been so popular is when you look at the average 401k plan for someone 65, excuse me, the median balance for someone 65, their 401k is $89,000.
Wow.
And that's not the fault of the 401k. It's the fault of the individual who's waited so long to start getting serious about their financial situation. But at the end of the day, you've got 65-year-olds trying to retire. We have a huge baby boomer group of people that are retiring on nothing. And this strategy is a really good solution for those people who could turn that $100,000 or so into basically a pension for life. But yeah, I mean, we're looking at a retirement crisis. I say it's the biggest epidemic, greater than all diseases combined, that's affecting millions of people. And the last thing I'll say is that just in my experience, too many people relied on hope. They hoped everything would work out in the end, and I'm here to tell you, hope is not a retirement strategy.
Do a lot of people utilize their 401k in order to invest in these type of strategies with you?
Yeah. Well, they would ultimately, when they roll their money out of their 401k into an IRA, into an individual retirement account, then they could use that account to implement the strategy, buy high quality stocks, and then sell options against those stocks to generate instant income. Yeah.
I learned something last weekend. I was at an event, and they were talking about using self-directed IRAs, and how
Yeah.
self-directed IRAs, you can invest in certain alternative investments and products that you never have to pay taxes on it when you take them out. I thought that was pretty interesting.
Yeah, no, the self-directed IRAs have become extremely popular in allowing people to invest, like you said, in alternative asset classes like gold, silver, real estate that traditionally you couldn't do. And that's why you're seeing this boom in self-directed IRAs. So yeah, to your point, very, very popular.
Yeah, in
Yep.
fact, I think one of the stories that was told, I think Peter Thiel, he has probably the most largest IRA now, as far as that, because he took $500,000 and invested in Facebook
That's
out of
right.
his IRA, and it's worth like $6 billion today. And he never has to pay taxes on that money. That's pretty cool.
Yeah, it's made a lot of politicians upset about that. They don't like anyone getting wealthy in this country.
Yeah. Well, when you control that kind of wealth, I guess you can make policy too, right? Depending on how much money you
Exactly.
give.
Exactly. No doubt about it. So true.
So
So true.
anyway,
Like,
I wanted to hear a couple of stories out of your book, The Rich
oh
Go
yeah.
Broke. And so if you don't mind, tell us a few of them.
Yeah, absolutely. And this book, it was actually Robert Kiyosaki's idea, and he came up with the title and the framework for it. Because for years I've been telling Robert these stories of actually mutual people we knew, most of which we knew, that had everything and then lost it overnight, or pretty close to overnight. And so he came up with the title, The Top 10 Reasons the Rich Go Broke. And although it's a book of real life individuals who had a lot of money and then lost it, it's really about the book is really about why so many people continue to struggle financially. And the overarching theme of this book is, and thanks for asking, Mike, is learning from people's successes is smart, but learning from their mistakes is genius. And this book really talks about a underlying fundamental psychological reason why people struggle financially, why so many people are living paycheck to paycheck, why so many people carry so much debt, why so many people are going to be reliant on the government for their retirement, why so many people have only $90,000 in their 401k at age 65. But to answer your question is, I think the two stories that really resonate, and they're very emotional stories, and it's a story book, and I think that's why it's been so popular. But the two stories that really kind of resonate with a lot of people, and the first one is I trust my financial advisor. I've seen this for so many years personally. People come into my office like, "Oh, John, I got a recommendation, I got a referral, or I saw you on TV. Here's my money." And they don't ask a single question. They don't do any due diligence. As soon as I start telling them about my process and my system and how I work and they say, "John, we don't have time for this. We trust you. Take my money." And I've seen that and I call it the other thing, maybe your listeners can relate to this. They call it the chicken dinner syndrome. And this is when someone gets invited to a financial advisor's free chicken dinner, and as soon as they show up, they see they get a nice free dinner, and they see the presentation, and the administrative staff is there and everyone's friendly, and they go, "Oh my gosh, I trust these people immediately." I mean, it is so devastating that people are just so willing to trust their hard-earned hundreds of thousands of dollars to someone they don't even know, and they don't do any due diligence. Frankly, they don't know the questions to ask to really understand if that advisor is worthy of managing their money. They just rely on fancy offices and nice furniture and a slick presentation. But the story in the book is really, I remember getting a call. This was back in Honolulu. I got a call from an old friend of mine. He was probably twice my age at the time, well into his 80s, and said, "John, I got a problem. My advisor won't give me my money." And I said, "What are you talking about? He won't give me your money." And then he shared with me the name of the individual who was claiming to be a financial advisor. I knew this guy. And this guy was not a financial advisor. He was claiming to be. I had no idea. I mean, he played racquetball all day long at this health club. And so he said, "Can you meet me at the health club?" And I said, "Sure." So I showed up. And sure enough, this quote advisor never showed up. But then when my friend showed me his statements, they were done on a typewriter. It was insane. And then I looked at the holdings, they were written down on a piece of paper. And the guy was promising returns of, I think it was 5% a month on treasury bonds. Now, granted, the individual I'm talking, my friend, I mean, should have known. I mean, this is just pure stupidity that he didn't pick up on this, but he fell for the lure of high returns and he got sucked in. And I said, "How much is this guy charging you?" "Nothing." I mean, it just red flags went up everywhere. And I won't share the end of the story, but it was I'll leave it for suspense. Well, maybe I will for the radio show. A week later, the friend called me and he said, "John, everything's okay. We're meeting with the banks and everything." Sure enough, the next day the advisor hung himself.
Wow.
And that was the end of my friend's massive retirement program plan, and it was just a horrific story. And sadly, this is not uncommon. Most financial advisors, and I coach a lot of financial advisors throughout my career, they're very good people. They're trying to do the right thing, but they don't know what they don't know. And then there are also a few bad apples out there. And one comment on that, Mike, and I know I'm rambling a little bit. One comment on that is this whole term fiduciary advisor. Folks, anyone listening to this, don't be lured by this idea that someone who is a fiduciary is holier than thou, that they're more or better equipped to manage your money than someone who is not a fiduciary. That fiduciary word, the new F word in the financial industry, is as I call it, is a marketing scam. It does not mean that you're better protected or your money's being managed any better. It does not. I can make a strong case, a very strong argument that not being a fiduciary protects you than working with a fiduciary. So I wanted to sidebar that as well. So a lot there, but
Yeah, it's amazing, not only in the financial side of it, the stock side, but that happens all the time in the oil and gas business.
sure,
People, they go out and they hear all these great stories and, that someone's going to become rich and,
yeah,
I mean, they're going to do one deal and it's going to make you a 5 to 10 to 1 return on your investment. And, those returns just aren't in that out there. I mean, unless you're going
yeah,
to get out and you're going to drill extremely high risk projects or invest in high risk projects, then you may have the potential for those type of returns. But when you're trying to generate cash flow, you're trying to hit singles and doubles, right? You're not
right.
swinging for the fence every day.
100%. I mean, exactly. There are no get rich quick schemes, period. End of story. And you probably see this a lot in your business, Mike, with the real fancy brochures.
Yeah.
And I think there's probably a direct correlation between the fancier the brochure, the more riskier the investment, right?
That's exactly right. In any type of investment,
Yeah,
really. I
yeah.
mean, you
And
hear these stories all the time.
right. So again, don't be lured by the brochure either. But like oil and gas, financial advisor industry, the same applies to accountants and lawyers. I mean, you have to do your own due diligence. And by the way, on a side note, I do have a free white paper on my website titled "The Ultimate Guide to Selecting Your Financial Advisor." And it's a step-by-step process in how to go about interviewing a financial advisor. I know a lot of people, they're afraid to ask questions in these discussions with a financial advisor when they're interviewing them because they're afraid to look stupid. I'll tell you, there are no dumb questions when interviewing someone who's going to manage your money. So you can check out that free guide. The other story I was going to mention, Mike, is that a lot of people resonate with is my company will take care of me. And I've seen that a million times, as I'm sure you have, is that people think, well, you know, I have a pension at my workplace or the 401k or my employer's loyal to me. I mean, there's a big story in my book about how a managing director at a major firm basically put all of his money into the company, in the 401k, into their stock, the employee stock options plan. He was making a huge salary, and then that whole company blew up, and he lost everything. I mean, so there's a lot of stories where people just trust their company or someone else to take care of them. And I think the message of that story is that you have to be responsible for your own situation, your financial situation, and not rely on somebody else. But
Yeah, I know we
yeah,
had a big issue like that here when the telecom,
yeah,
it imploded back, I don't know, 10, 15 years ago. And
yep,
there were a lot of people that invested in all of these companies, had their life savings in them. They worked for
yeah,
them their whole career. And overnight, they were just gone.
that's right, that's right. Enron's a perfect example, right?
Yeah. You're
WorldCom. I
right.
mean, I could list all these companies, and then with the financial advisors, the Bernie Madoffs of the world, and we're seeing these all the time. So, I think the overarching message for people is you trust but verify, like Ronald Reagan used to say. Trust but verify. You've worked way too hard for your money to just let somebody else manage it for you without any due diligence, or any research at all. So,
And that kind of
yeah,
leads us into the next topic
yeah,
and talk a little bit about oil and gas. That seems to
yeah,
be happening, this trust and not verify seems to be happening with the current administration. I mean,
yeah,
Biden has come out and, originally he talked about destroying the oil and gas industry. And of
yeah.
course, in an election year, he goes out and he drains the strategic reserves. And now he claims that he's not going to fill them back up, which in my opinion, that was kind of the plan all along, right? I mean, he's living up to what he said.
He said it. I mean, he told us exactly what he's going to do, and now we're living with the consequences. Folks, elections have consequences. But here's the thing, Mike. no country has reduced its carbon dioxide emissions more than any other major nation on a per capita basis than the United States. You
Yeah.
know, I did some research before the show. Our GDP is about 50% higher than China's, and our per capita emissions are the same. Though theirs goes up every single year, ours has come down every year over the last decade. It's
Yeah.
Our
Just
carbon
great.
dioxide emissions are falling because we're using more natural gas than ever. And so naturally, the Biden administration wants to end natural gas. It's crazy what they're doing.
Yeah. And they use the EPA kind of like their strong arm, right? I mean, they don't come out and actually say it, but where they really try to put companies out of business is have the EPA go after them and come up with all these crazy, laws and rules,
Yep.
which, delay projects. I mean, more recently, I think you just heard that, they're now delaying the development of the Willow project up in Alaska because of some
Yep.
EPA, laws that they put out there.
It's amazing that they're doing all of this in in an election year, right? I mean, why would they be doubling down on this kind of thing? That's just going to drive prices even higher. It's going to drive inflation even higher. They're talking about major tax increases for both personal and corporate. And you wonder why would they be doubling down on this stuff up until an election? And I think they just feel that most people are completely uninformed, and the media will run cover. And I read an article this morning. It's as if the White House is signaling kind of pessimism about the elections. It's sort of like they're in a panic to jam through as many regulations as they possibly can. I mean, they have bad polls, right? Biden's not polling very well at all. He's a very unpopular president. We've got these disruptive protests that are going on. We've got rising threats around the world. We've got inflation that's still up there and climbing. Consumer confidence is draining is has dropped, and they're just jamming these regulations down. And I put this list together. We have new FTC rules that ban non-compete agreements. They're rewriting Title IX to allow men to compete in women's sports. More federal bailout loans for bailout for student loans. We have the FTC preventing mergers. We have new overtime rules. We have the decision restricting oil drilling in Alaska. We have the FTC blocking hospital group mergers, now new power plant emission rules. And now the EPA says they want to ration electricity. It's crazy what they're doing now. To me, I think it's right. It's like the White House is in a panic. They're very leery and concerned about losing the election. And so they're just jamming all this stuff towards us. It's crazy.
And I think a lot of people, they just have this feeling that the government is going to take care of them, right? I mean, in the
Yeah,
end,
yeah, yeah,
we're going to
that's right.
have, all the solar, all the wind power that we want. And, we're not going to need fossil fuels, which is just ludicrous.
No, our demand for fossil fuels is just it's going to skyrocket given some of the things that are going on. But before we get there, I just want to mention the tax plan. Biden has said he wants to eliminate the Trump tax cuts. Eliminate the Trump tax cuts.
Yeah.
It's crazy. So he's looking at higher tax rates, eliminating the Trump tax cuts, a lower standard deduction, a new 20% tax on small businesses. More families are going to be forced to pay the alternative minimum tax, a full repeal of expensing for business investment in equipment. Affects you, Mike. Repeal of expensing for research and development, and more families forced to pay the estate tax. And this is all because Biden says the rich don't pay their fair share, which is complete nonsense. When you look at the top 1% of earners, the top 1% of earners pay over 30% of all taxes. The top 10% pay over 70% of all taxes. So this is a complete scam that they're trying to push down our throats. And I just hope and I pray that this is all going to backfire in November.
And who's going to pay for it in the end? The middle
Yeah.
class, right?
Oh, the middle class. It's always the double middle finger to the middle class, always. And of course, the lower income class as well, always. And they say that no one below $400,000 is gonna look at taxes. Not at all. I did this study yesterday. I talked about it on a podcast. From memory, a family earning $85,000 with two kids, they're going to see an increase of $1,700 per year in taxes. A couple making $165,000 with two kids will see an increase in $2,500 in new taxes as a result. That's just a result of letting the Trump tax cuts expire. That does not take into account new taxes that they're proposing as well. Yeah, and going back to the whole energy debate, the demand for energy, fossil fuels, is not going to stop at all. I mean, we're producing more oil than we ever have. You know this better than I do, Mike. And that's only going to increase. And the two main drivers isn't just our own demand as individuals, but we now have cryptocurrency and then we have artificial intelligence. And those have a massive amount of demand for energy. And there's no way wind and solar is going to be able to handle that at all, particularly when you look at the EVs, that EV mandate that they want to push down our throats. There's no way our grid can handle that if the EPA gets what they want to do, which is lower production at all. It's just not going to happen.
Yeah, I mean, as you said, as far as AI, it takes a tremendous amount of electricity, and so does Bitcoin, right? Just to generate Bitcoin.
Yep.
And that's not going to come from wind. You live in California, right?
Sadly, yeah.
So the state in California, they want to do away with all combustion cars by what, 2035 or 2025?
2034, I think it is, Mike. Yep.
It is.
It's soon. It's around the corner.
But
and trucks, forget it. No gas powered trucks. It's just it's insanity. And talking about technology and the demand there. And I saw this a couple of days ago. In the U.S., we have the most data centers, and their share of electricity consumption will rise from 4% in 2022 to 6% in 2026. AI could add 8% to natural gas demand by 2030, with backup generators burning more diesel as well. So, that's why I'm very bullish on the energy sector as an investor. And, I will say, Mike, it's really not every day that regular investors have a real shot at getting on the ground floor of something as big as liquefied natural gas. I mean, we're seeing a huge boom here. And if you look at some of the big players like Shell, for example, they're really bullish on LNG. They're expecting a 50% jump in global demand by 2040. And that's no small number, of course. And it's not just Shell. I saw experts that say LNG exports could boost the U.S. economy by, get this, $73 billion by the same year. And that's more than double the $31 billion of output last year. And plus, they're saying it could create about 400,000 to 450,000 new jobs. Berkshire Hathaway just up their game as well, with a 50% stake in an oil company, I think on the East Coast somewhere. And then you have other companies like Aramco, you have Exxon, you have Occidental, big time players that are expecting huge booms in the oil and gas industry. And that's why I'm very bullish. And even Australia, they're pouring massive amounts of capital infrastructure into this growing sector. So this is a worldwide phenomenon, but unfortunately, this administration wants to fight it every tooth and nail. I don't think it's for environmental purposes at all. I think it's for control and power, but that's my opinion. But
no, I agree with you. And oil and gas offers some tremendous tax advantages as well, for
absolutely.
investors coming in on the intangible drilling cost deductions. And, you were talking a little bit earlier about how, people, how they make money is trying to save taxes, right? Because taxes is one of our biggest expenses. So if you can go out and make an investment that's going to not only have a chance to generate cash flow, but to offer some pretty significant tax advantages, that's pretty important.
Yeah, no, on top, to add to that, if you can invest directly into, a direct drilling program like you offer, Mike, that is definitely the way to go because of the tax advantages. As you said, taxes, for most people, taxes are number one expense, household expense. And that's the beauty of these direct drilling programs that you offer. Absolutely.
How do the public companies, I mean, how are they, energy companies performing in these days? They should be doing pretty well also, right?
They're doing very well. Absolutely. In fact, Citigroup just came out with an upgrade on the energy sector, thinking that saying that they can withstand any geopolitical problems That's their forecast. But the nice thing about, oil and gas is for me personally, I have a passive portfolio and then I have an active portfolio. My active portfolio that's my stock and option program where I'm generating that cash flow. My passive portfolio, that's my high quality, nice dividend paying stocks that I just buy and hold. And that fits my energy sector perfectly well. I'm looking at Exxon, Chevron, Occidental, as I mentioned, that are nice, just stable growers that pay a nice dividend. Exxon pays approximately 3%. Chevron pays just close to 4% dividend. Plus, I get the capital appreciation along the way. And like we talked about, with this demand growing for natural and fossil fuels, I think it's a great place to park your money.
Yeah,
But again,
yeah.
you don't get the tax breaks by buying those individual stocks or ETFs that contain energy stocks, which is another way to go. You don't get the tax breaks as you do with the direct investments that you offer, Mike. But it's, if you're not an accredited investor, which is required to be a direct investor, buying the individual stocks is a nice way to go.
Yeah, it's a different way to play the oil and gas game. And from what I know and what I've read is that, oil prices are going to continue to remain strong, even
Mm-hmm.
if, a lot of people think, well, if we change the administration, then oil prices are going to come back down. And the simple fact is, I mean, we're using more and more oil and gas in the world right now. In fact, the United States is basically producing oil and gas at record levels. And so demand is going to continue to grow. I mean, I do, think as we develop more resources, but the prices are going to stay strong going into the next several years as far as on
Yep.
oil and gas, because I don't see anything out there. Wind is not working, solar's not working. Maybe solar some point down the road has a chance, but until we start using more ways to use more nuclear and stuff like that, I mean, which is probably the cleanest form of energy as far as nuclear energy, but they're just not going to allow that to push forward.
No, absolutely not. And despite this huge push for wind and solar, I've got 19 solar panels on my roof. All I've seen is my energy prices skyrocket, and that's California, of course, because of the regulations. I mean, I'm paying about $1,000, roughly $1,200 a month just for electricity and gas. It's crazy, and that's just three of us living in this home. It's through the roof. So yeah. But Mike, I wanted to ask you, given our strategic reserves and all the geopolitical tension around the world, and the fact that Biden basically depleted our strategic reserves for the election in 2022 because he wanted to drop energy prices, and now we've got depleted reserves. What are we going to do now that oil's at $85 a barrel a share, and we've got three major wars going on with the potential that this thing could turn into World War III? I mean, what are we going to do?
Well, I think I agree that, this is all a planned, uh, what they've planned to do over since Biden first became elected, right? I mean, he obviously said he's going to get rid of fossil fuels.
Yep.
During the Trump administration, when we had low oil prices during COVID, Trump filled all the reserves up at about $20 to $30 a barrel
Yeah.
when prices
Yeah.
were at their lowest level. And
Right.
now we're actually out there fighting two proxy wars, against some of our
Yeah.
biggest allies, and we've got the lowest strategic reserves that we've had in history, about 200 million barrels left. And when you use in the United States, we use about 22 million barrels a day of
Yeah.
crude product here in the United States. So if you only have 200 million barrels left, I mean that's not a lot of reserves, as far as that. So I don't think they're going to replenish them. I think, they're going to use the ploy
Mm-hmm.
that oil prices are, $85 a barrel. They're very high now, but I don't think they ever had an intention of refilling the reserves.
Yeah, I think you're right. This whole, you look at the bigger picture, nothing makes sense anymore.
Yeah.
Left is right, up is down. I just, this huge push for EVs and electric trucks, they don't make sense. Nobody wants them. They're extremely expensive. They damage the climate more than a combustible car. Uh, I, you know, I just can't make heads or tails out of this. You have to go back. I mean, look at the infrastructure plan in 2021. Um, the bill provided $7.5 billion to build 500,000 public charging stations for electric vehicles by 2030. 7.5 billion in 2021. So far, they have built a grand total of 7 chargers across the country. I just don't. The trucks are too heavy. The batteries are too costly. The trucks don't go very far. They don't work in the cold climates. Same goes for cars. Nobody wants them. I just don't get it. You have to go back to what's the overarching goal? What's the big picture that they're trying to get? And to me, it's all about control and power. And when they can control, and then the next thing will lead to our digital currency, which is another topic. But if they can control where we drive, how we drive, where we go, I mean, I think one of the big reasons for this big EV push is that trucker strike in Canada would never have happened because they could have controlled that. They could have stopped that in its tracks, which they can do with an electric vehicle. So I know we're getting off topic here, but I don't think any of this has anything to do with the environment. They never attack China or India for their carbon emissions ever. They never mention it. This whole thing just does not make sense to me. But
yeah, it's all a planned model, I think. If we, and like you said at the beginning of our podcast here, that elections have consequences, and everybody better wake up out there. I mean, obviously, because if we don't change course, I mean, just more and more of this stuff is going to continue to accelerate, and we're going to find ourselves in a bad place. Well, John, it was great having you on today. And can you tell our listeners how to follow you?
Always a pleasure, Mike. Love spending time with you. And by the way, that Arizona State thing was still in the back of my mind. That was a lot of fun. I think we made a major impact to those college kids. It was great. It was refreshing to see, actually. Don't you think?
Yeah, no, I thought it was great. And there's a lot of very bright kids that were there. And I had a great time, I know. And I appreciate Robert inviting us. And hopefully we'll get to do some stuff like that again in the future.
I really hope so. I really hope so. But anyway, thanks again for inviting me on the show, Mike. Always great time. Always great spending time with you. And if someone wants to learn more about, some of the free resources on my website or my cash flow wealth building system, they can go to my website at johnmacgregor.net. And that's MacGregor, M-A-C, Gregor.net. So thanks, Mike. Appreciate that.
Thank you.
This podcast is a presentation of Rich Dad Media Network.